Today I'm going to be sharing 5 trading tips to help you on your crypto journey in 2024. Now the market is looking extremely bullish at the moment. Hopefully it continues into next year, and I think it's best if people start to position themselves now, pick up new skills and basically help themselves make it in the next 12 to 24 months. Now, if you do enjoy this video, please do drop a like and subscribe. But let's get started with tip number 1. And tip 1 starts at the very beginning, and it is establishing what type of trader you are. Now in trading, you may be a swing trader, a scalp trader, an arbitrage trader, maybe a fundamental trader. It really doesn't matter. There is no right or wrong. It's about what works for you and what you have the most interest in, because if you are not interested in that type of trading, you probably won't succeed at it. So it's about establishing which trading is right for you. It doesn't have to be one, it can be many. It's just finding what fits. Now, to find what fits, it does take some time. It is trial and error, giving them a try, seeing how you feel about it, seeing what the success rate is like, and then moving forward and continuing to establish your skills from there. So tip number 1 is about establishing which type of trader you are to ensure that you give yourself the best possible chance of success in crypto over the next couple of years. And just before we move on to the next tip, I am going to share that I have put some resources in the description down below. Now these resources are what helped me in my journey in the very early stages, almost 4.5-5 years ago now. This is where I basically begun my trading journey. They really helped me not just with the technical analysis, but with the psychological side of trading, and they are definitely recommended by myself. Moving on to tip number 2 now, and this is that risk management is far more important than technical analysis. Now, I cannot emphasize this enough. Drawing lines on a chart is the easy side of trading. Understanding what support and resistance is, putting that onto the chart is probably where most people begin, but it definitely isn't where trading ends. Now, when you look at the risk management side of things, this is looking at your risk per trade. It's making sure you are reducing your losses, really running the numbers and understanding whether or not you are a profitable and therefore a successful trader. Now, a lot of people have the interpretation that a good trader has a very high or even 100% win rate. This isn't the case. You are going to lose, and it is in fact how you manage that risk and manage them trades to ensure that your wins outweigh your losses. So it isn't pretty, it is quite boring statistically, looking at spreadsheets, making sure that the numbers all add up to ensure that you are successful. But it is far more important, because drawing the lines on the charts and not actually actioning any trades. You have to execute what you've learned and ensure that that results in profits. Tip number 3 now, and this is rules over emotions. Now, what do I mean by this? And it is very correlated to having a plan and actually sticking to it. So when your emotions get involved in trading, it generally isn't a good thing. It's how FOMO is triggered. You start to second guess yourself. You really need to play this in zeros and ones. You need to be binary. You have a plan, you stick to that plan, and you let it get stopped out, or you let the target hit. It really is that simple, but it is so much harder to execute when you're actually involved in the trade. Now, sometimes emotions can take over if you are over invested. Sometimes people can't sleep at night. That is a sign that you are over invested as well. And it's really just about doing what you can, understanding yourself as a trader to keep them emotions intact, and you just have full focus on the rules that you've put out for yourself, and you stick to that plan. Now, rules can vary again from person to person. It really depends on your trading style, how things are going, and you'll figure this out over time. You are not going to have a set of rules on day 1 that are still there for you years into the future. These rules will change, and that's completely fine as you're trading and as you as a trader changes over time as well. So it's just about understanding that the best you can do at keeping them emotions out of the game, keeping them intact, is going to be hugely beneficial to you and your trading. Tip number 4. This is no paper trading. Now, for those who are not aware, paper trading is basically when you don't risk anything at all because you are learning. It may be using a demo account, it may be just be tracking trades that you would have taken on a piece of paper, but this is how I started my trading journey, and it really wasn't a good idea. And the reason for this is because I had no skin in the game. Sometimes you throw all your rules out of the window because you're bored or you're just getting fed up. Maybe you go all in on a trade on the demo account just because you can, because it doesn't mean anything. Now, if you actually start with a small amount, and this is relative to each person's portfolio, but if you start with a small amount, you at least have some skin in the game, and you want to try your best to treat that like it's $1 million, because it gives you a sense of reality of how trading actually is, and you want to basically build that up as high as you can to prepare yourself the best way you can before you actually start trading with an account or an amount that you actually would be in the real world as an experienced trader, for say. So tip number 4 for me is risk something, don't risk nothing, because it is just not a fair reflection. You know, them emotions that we talked about in the last part, they're not going to come into play when you're paper trading, because there's no reason for them to. When you actually have some money and when you actually take a few losses, then you'll start to feel what trading actually is. And last but definitely not least is tip number 5, and this is just as important as the rest, and it is being able to stay humble and always understand that you are not the perfect trader. You're always going to be learning. No trader has a 100% win rate, so it is about being open to that and just having the humility to understand that what worked 10 years ago might not work today, especially in a fast-paced environment like crypto, because things do change and they do change fast. So trading will also have to change and adapt with that. Now, the thing is, in a bull market, as many of you may or will experience, people think they are great traders because the market is just going up. They get this confidence that might not be a fair reflection of how their trading ability actually is. And then when the bear market comes back around, they realize that maybe they wasn't as good as what they initially thought. So if you have the mentality of staying humble and understanding this, it is going to put you in a much better position, because you understand that there will be times when you can risk more. There will be times when maybe the trading conditions don't suit your style. So it may be that you know when to take a time out, whereas the person with the ego who has been winning all bull market long might not understand that it's time to take some risk off the table, or potentially sit out for a little while and have some patience, because, you know, they've got this confidence that isn't really a fair reflection of how things are. So it's just important to understand this, especially going into the bull market. Always keep in the back of your mind that you have to stay humble and you will always be learning. So that is all for today's video. Hopefully you enjoyed it. Whether you're a beginner starting your trading journey, or even a more experienced trader who just needed a quick refresh or a recap, maybe it was helpful for you as well. If you did enjoy it, please do let me know by liking, subscribing and commenting down below. But in the meantime, please do trade safe, invest safe, and I will catch you in the next one.